Good afternoon, everyone. Trader Tim from E-mini Mind doing a Monday market analysis video today, November 7th, 2016. Tomorrow, election day in the U.S. Going to be some fireworks, perhaps. All I can say is it's going to be interesting. I will be unable to trade tomorrow due to another conflict. So I moved the trading room to Thursday. Same time, just had to move it to Thursday instead of tomorrow. In terms of what to expect, it's going to be interesting. Today in the ES, we gapped up quite a bit and then rallied all the way through the day. Now yesterday, or Friday rather, Friday and Thursday, really all of last week, Wednesday, Thursday, Friday, we traded down to the 50% retracement, the full from July up to September. We traded all the way halfway back, 2086, we'll call it 2086.25s, and there were a couple entries on Friday. Unfortunately, they weren't able to hang on in terms of at the close. We came down and broke the entry, so in the morning on Friday, we had failed a short right at the daily long. We broke that prior swing high, and in the first long setup, traded down to the 50 to the tick, and we were off and running. But then, like I said, later in the afternoon, we ended up closing down back at lows and closing below that 61.8. So futures were tough to get in and stay in for a longer term trade. If you're interested in trading a daily level, I would certainly urge you not to trade it on the futures in terms of holding overnight. You could do a couple things. You could trade the SPY, that's the ETF. You could trade an option contract. You could trade the underlying, but that's a much better way to contain your risk. Even if you're trading the underlying with even 10, 20, 30, 40 shares, if you're trading a daily level, it's a little bit easier to get in and stay in. You don't have to worry about rollover. You don't have to worry about the option deflating in price. So that's one way to attack the daily levels. Now, on Friday, I drew up the most recent, in terms of the most recent swing high to low, 50% retracement. That was the most recent setup, or opposing setup, we'll call it. Now that traded through today, so I'm going to get rid of that, and we're going to draw from highs, trading hours only, down to lows. And you can see we're not far off. 21.3550 would be that daily level. So kind of right in the middle of the descending triangle range, kind of lines up with previous lows over here. So we'll see what happens tomorrow. Is going to be very impactful in what happens with the markets going forward. If we come up and break the 61.8 to 21.49, then we have targets all the way up at the 22.40 level. So we could really take off, breaking through that 21.91 high. If things don't go that way and we start to roll over and sell off below the 61.8, the 20.60 level, then we could come all the way back down below the 2,000 level. I mean, we even have the potential to come halfway back all the way down here. The 2000, 1998, 2000 level, kind of previous major swing low area. So we'll see what happens tomorrow in the election. I would urge you to be cautious. No need to put on any big positions. Certainly no longer term positions need to be put on. We can let the next couple of days settle out. If you're looking, let's say you pulled out kind of up here, we were moving sideways, as I did with some longer term positions, or at least portions of them, took profits on those, and my intent was to get back in down near the 50% retracement. Well, not going into an election, not really interested in putting on a position prior to that in terms of the longer term situation. Let things play out this week, and then next week, if we're still holding this 50% retracement, then you can add to longs. Or if we're starting to roll over, have a big sign that more downside is coming, perhaps breaking the 61.8 and putting on a larger, longer term short position could be in play. So with that, we'll talk to everyone on Thursday. And if you want to join in, feel free over at eminimind.com/VIP. Thanks. Talk to you on Thursday.